Hello everyone, Ignatius L. Jackson CPA here with another awesome video for you. So today we are touching on some last minute year-end tax strategies / tips that you should be considering for you and your business. So if you're a small business owner and you're trying to figure out some way to save some money on taxes, even for some of our non-business owners, we're going to go over a couple tips for you as well to save some money on some taxes that you can do by the end of the year. So go ahead and stick around. We're going to be right back in a second with some awesome stuff. All right, everybody, and we're back. So thanks for tuning in today. Again, this video is going to be about some last minute year-end tax tips that you can still implement before the end of the year to save you some money on taxes. So let's say, for example, you had a great year in your business. You got like $500,000 of net profit. That's going to probably be showing up. Here's a couple last minute things that you can potentially do to save yourself some money on taxes. All right. Now, with anything, I'm going to tell you, do not try to do these things on your own. Speak with your tax advisor, accountant, a CPA, whoever you're using, enrolled agent, whatever you're using, okay? Speak with them and get their feedback and get them on the same page as you are before you go and do any of these things, because I'm just gonna go high level with these tips and strategies. I'm not gonna go into too much specifics, all right? And so you're gonna wanna make sure that you're following up with your advisor to make sure you go through the strategies completely and you understand exactly what needs to be done. The intention of this is going to be just to give you some ideas and for you to get a little memory jogger, and that way you can start the conversation with your regular preparer, accountant, CPA, etc. Okay. All right, that said, let's hop on in. All right, so one of the first things that you can do to save yourself some money, that's fairly easy to do, still plenty of time to get that done before the end of the year, is take a trip or have a board meeting. Okay, so or do both. You do a combination of both, right? So we have a few weekends left before the end of the year. You can go ahead and take a trip, like to, let's say, I don't know, Vegas, New York, Miami, wherever you might want to go. Okay, and if there's a business reason for that trip, you can write it off. Okay. So one of the ways you can create a business reason is having your annual board meeting. If you haven't had one yet, you can have an annual board meeting. If you have a pretty sizable business, like the one that's got $500,000 in profit, like I mentioned, then you can usually justify doing a quarterly board meeting to do a follow-up on stuff. So if you haven't done it for the fourth quarter, then you can go ahead and do it for the fourth quarter, okay? So get that trip in before the end of the year. One of the main reasons you want to do this is through the end of this year, meals are still 100% deductible. So travel meals are still 100% deductible this year, where normally they're only 50% deductible. So that's one key reason you want to go ahead and do this. Go ahead and splurge a little bit, give yourself a little Christmas present, have some nice steak dinners, all that good stuff, okay? Just make sure it's reasonable. Ordinary, necessary are the rules that you got to follow in terms of business deductions. So make sure it's reasonable. Don't go too crazy, but if you had a really good year, definitely have some fun, enjoy yourself a little bit, okay? Now, be careful with entertainment. Entertainment is still not deductible unless you can justify it as like an advertising component or a cost of goods sold, like you're selling tickets or stuff like that. And we've talked about that before, okay? So just keep that kind of stuff in mind. But other than that, yeah, take a trip. And just general rules, again, if you get a travel day there, a travel day back, you got a business days in between, okay? If it straddles a weekend, you can usually get that weekend where you can do whatever you want to do and not have to have any business meetings. If you have legitimate reasons to have a meeting on like a Friday and a Monday, or if it's a holiday on a Monday, like a Friday and a Tuesday. Okay, so there's ways you can kind of play around with that a little bit, but you just have to make sure it's all documented well and that it's all legitimate, okay? But that said, it's a great strategy, something you could implement before the end of the year. We have one more holiday left for the year. I was going to say New Year's as well, but technically New Year's Day is the holiday, and that's in the new year. So Basically one more holiday for the year where you can potentially get like a 3-day weekend, 4-day weekend, maybe even. So yeah, just some things you got to kind of think about there. Okay. All right. So that's one tip. Next tip, if you're an S corporation, or if you think you want to be an S corporation, make sure that you are running payroll. Okay. One of the rules of being an S corporation is you have to do a W-2 for yourself. So if you're converting to an S corporation, or you are currently an S corporation, make sure you have run some payroll for yourself before the end of the year. Okay. Now, if it's just for you, technically we could probably get it run like the first week of January, but much later after that, you're not going to be able to get it done. So we need to make sure you get your payroll done before the end of the year, and you want to make sure that everything's on that W-2 that should be on there. Okay. Health insurance, as an example, as S corporation owner, any health insurance premiums that the corporation is reimbursing you for has to be included on your W-2 wages. Okay. You can't just arbitrarily say, oh, I'm not going to include that on there. No, you have to include that on your W-2 wages. Okay. In order to get the deduction for it, you have to include that. So again, work with your accountant, make sure they understand that you have health insurance that you're getting reimbursed for before they process that W-2 for you. All right. The other thing you got to make sure is on there. If you have a 401k plan and you're doing a contribution, whether it's pre-tax or Roth, that has to go onto your W-2 as well. Okay. You do not have to put your after-tax contributions on there if you're doing the mega backdoor Roth strategy, but you do have to put either whether it's a Roth or a pre-tax 401k contribution, that has to go on there. You also do not have to put your employer contributions on the W-2. So there's two things that you can kind of figure out that you don't have to put on the W-2. One of those you can actually figure out sometime next year. You don't have to decide on the employer contribution to the 401k until sometime next year. It's either March 15th or September 15th, depending on if you do an extension for your S corporation. Okay. All right. So that's another tip. Make sure you get your W-2s in for S corporations. Next tip, auto deduction. This is a very common year-end type thing that people often do. I've had some recent videos I think I did on this as well. Don't take an don't go and buy a brand new vehicle just for the tax savings. Make sure you actually need it. Make sure you're actually using it for the business. Make sure that you're benefiting from it. That's a waste of money. If you go out and spend money just to save on taxes, you're not getting a full credit for how much you're spending on that vehicle. Keep that in mind, okay? If you need a new vehicle, let's say your vehicle is 10 years old and you need a new one, okay, then yeah, go get one before the end of the year. If it's over 6,000 pounds and you use it 100% for business, we can write it off 100% in your business, all right? I will tell you though, if you do not have another vehicle that you regularly drive for personal use, right, writing off that vehicle 100% in your business is usually going to be a no-go. All right, we're going to have to take some portion of that and consider it personal use, because they're not going to believe that you're driving a 100% business when you only have one vehicle. It doesn't make any sense. All right, that's it. I'm not going to go much more into details on that. I talked about that at length, I think, in a recent video, and I just don't want to belabor that issue. Okay, but that is something that you could do before the end of the year. It does have to be done before 12/31. What that means is you get the contract signed, dated with the auto dealer before 12/31. All right. Doesn't mean that you have to pay for the full thing. You can use a loan, but you do have to have the vehicle contract done before the end of the year. Okay. Paying family members. Oh, this one's awesome. All right. Paying the kids, paying the family members. This is another strategy that does have to be done before the end of the year. You have to actually transfer the cash in order for this to count for this tax year and get you a deduction on your taxes as a business owner. Okay. Two methods that we're doing here. If you're a sole proprietorship, you can just go ahead and pay the kids directly out of the sole proprietorship. And it's a done deal. Okay. They have to have their own bank account. Okay. And if you want to contribute to the Roth, you technically have until April 15th to contribute to the Roth for this year. So you don't have to do that right away, but you do have to transfer the funds from your business account to their personal account. Okay. That's all. Now, again, if you're sole proprietorship, just transfer it from the business account to their account. Good to go. Okay. If you are so sole proprietorship or partnership, either one of those, you can do that in strategy. Okay. If you're an S corporation, all right. If you're an S corporation, you have to take an extra step. S corporations or C corporations. Even though I don't talk about C corporations too much, it is the same strategy for C corporation as well. So if you are an S corporation or C corporation, you cannot pay your kids directly from the S corp. And let me clarify one thing real quick. I forgot to mention, this is a strategy for kids under 18. Okay, when I talked about just transferring it from your business account to the kids account, if you're a sole proprietorship, that's if the kids are under 18. Okay, if they're over 18, you got to issue them a 1099 or a W-2. Okay, so there's no just transferring it to the kids. You have to issue a W-2 or a 1099 if they're over 18. All right, so back to the S corp or C corp distribution. So when you're doing that for the kids under 18, you have to set up a sole proprietorship of some sort. Okay, generally best if you're married and you are transferring that money to a spouse's sole proprietorship. So let's say you own the S corporation and your spouse owns the sole proprietorship, and the kids work for your spouse in their business. Okay, it's a house cleaning business or janitorial business, or I don't know, a bookkeeping business. Maybe they do the bookkeeping for you, or a marketing business. Maybe they help you with your social media. So figure out what type of business it is, right? The wife or not, I shouldn't say wife or husband starts it. It's a sole proprietorship. And then that sole proprietorship then pays the kids for working on that side of the business. Okay. All right. It's also referred to as a family management company, but let me just tell you, if you go into a bank asking to set up a bank account for a family management company, they're going to look at you like you're crazy. Okay. All right. So, yeah, call it something else, like a marketing company, whatever. You don't have to get an EIN number for that business. You can just use your social. You can if you want to, but it's not really necessary. All right. If your kids are over 18 and you have S corp or C corp, just pay them directly from the S corp or C corp. Okay. So create either a W-2 or a 1099 situation, depending on what it is they're doing, and if they have the relevant experience, etc., blah blah blah, to own their own business in that field. Okay. All right. Either way, whatever way you go with paying the kids, make sure you have good records of what they did for the business, like a time log of some sort. You got some justification for their hourly rate that you're paying them, and everything is kind of on the up and up. All right. Don't just write a blank check for $12,000. What is the deduction for 2022? $12,950. Don't just write a blank check for $12,950, which is the standard deduction for 2022, and think you're going to be okay if you ever get audited. All right, you're going to have to provide more evidence than that. All right, but yes, paying your kids or family members is a great strategy before the end of the year. Now, if you're paying people that are not your kids, again, just issue them a W-2 or 1099. If you're high income and those people are low income, that's a way to do what we call income shifting. Okay, we're shifting income from you to other sources. All right, so especially if it's someone that you're giving money to anyways, if you're helping someone out and giving money to them anyways, just shift the income, pay them from your business, make them work in the business, and shift that income to them. Now, again, they have to legitimately work in the business. You're not just paying them for the sake of paying them. These are people that are actually working in the business. Okay. All right. Retirement plans. So we talked about the 401k a little bit when we talked about year-end W-2s for S corp owners, but let's dig into a little bit more. All right. So before end of the year, what you want to do is make sure you determine what you want your contribution to be when you're S corp or C corp. Okay. Now, if you're sole proprietorship, as long as you have the plan set up, you can technically decide how much you want to contribute up until your tax return due date. Okay. And again, this works really good when you have no employees. If you have employees and you don't have the plan already set up, a safe harbor plan already set up, then you're kind of SOL for 2022. All right. There's really nothing much you're going to be able to do, except maybe if you qualify doing a SEP IRA. Okay. Now, the SEP IRA might work if you have no employees that have been with you for more than 3 years, but you have been working in the business for more than 3 years. Then you might be able to utilize the SEP IRA to contribute just to your SEP IRA and not to any employees. Okay. So that's a way you can kind of get around the safe harbor 401k rules for this year. And then you go ahead and set yourself up with safe harbor 401k starting in January of 2023, and then transfer those funds from the SEP IRA over to the solo 401k, or not solo 401k, excuse me, the safe harbor 401k that you started for next year. Okay. And now your employees are eligible to contribute and participate, and you start doing that strategy. Okay. But if you don't have any employees, any full-time employees, then you can go ahead and just contribute as much as you want to it. Okay. So if you have a really good year, do the full employer contribution. It's up to you if you want to do pre-tax or Roth. All right. I will tell you my personal opinion. If your tax bracket is below like 32%, if you're in the 32% bracket or lower, I'm generally going Roth. I mean, that's what I recommend. That's what I do. That's what I would recommend anybody do. But it's ultimately your decision, okay? Because especially if you're younger, you have so much leg bandwidth and longevity ahead of you that Roth money is going to grow substantially. All right, so I'd rather pay taxes now on that Roth money and let it grow to the future. Okay, and we're going to go through some really cool strategies related to that in our retirement planning webinar coming up at the beginning of the year. So stay tuned for that. So yeah, it just depends on what you want to do. You could do Roth or pre-tax for your employee contribution, and then for the employer contribution, again, you don't have to decide that right away. You can do that up until next year. And if you wanted to do after-tax contributions and then convert those to Roth, assuming your retirement plan allows it, and this stuff works for both employees of regular companies, W-2 employees, and for small business owners, okay? So if your employer allows you to do after-tax contributions and then convert those to Roth, bam, do it. If you're a W-2 employee, that's a great way for you to save some money on your future taxes. So maybe you do a little bit of both if you're a W-2 employee. Maybe you do some, because you don't have very many other tax saving strategies you could do as a W-2 employee only without owning a business, right? So maybe you contribute pre-tax to your employee contribution, okay? And then you do post-tax or after-tax for all the other contributions you want to do up until you can contribute as much as $61,000 in total to a 401k plan. It's a great way for you to get as much money as possible into the 401k plan. All right. Both employees and business owners, the 401k is a great strategy for you. Okay. And don't forget about your Roth IRA, even though it's not required to be done before the end of the year, something that you want to kind of include into your strategy as another opportunity. Okay. Health reimbursement arrangements. So if you have a health reimbursement arrangement, whether it's through your job or through a small business, make sure you reimburse yourself before the end of the year. Okay. And I would tell you, this goes for anything where you're trying to get reimbursed when it's an S corporation or a C corporation. So as an S corporation or C corporation, if you used your personal card for expenses of those businesses, you have to reimburse yourself before the end of the year or it doesn't count. If it's a sole proprietorship or a partnership and use a personal card or a personal account of some sort, then you get credit for it still. Okay, you don't have to reimburse yourself in that situation. But the rule is for S corps and partner or S corps and C corps, you have to actually reimburse yourself for those expenses. All right. Now that said, if you've taken enough distributions, then we can just kind of allocate some of that distribution as a reimbursement and some as a distribution rate. But you have to make sure that you're taking some distributions. Otherwise, we're not going to have anything to give you that credit for that reimbursement of those costs that you're incurring. Okay. So keep that in mind, people. Keep that in mind. Real estate. Oh, real estate. Forgot to talk about real estate. All right. So when it comes to real estate, if you can get a deal done before the end of the year, do it. Make it happen. Now, you're not going to be able to get bonus depreciation unless you can place it into service. So, for example, let's say you find yourself a little small multifamily project or a single family house that you want to buy that's currently being rented to tenants, and you can close on it in the next, let's see, 10 to 15 days or whenever this video is posted, then do it. That would be a great way. And then we can do a cost segregation study because it's already in service. You already have a tenant in place. It's in service the second that you close on it. Okay. So that's a great way to get yourself some additional deductions potentially. Now, you're really only going to benefit from this if you have either other passive income that the losses on that new unit is going to offset, or if you're a real estate professional, or if you qualify for the short-term rental exception. Okay. Or you can also have your income be low enough to where you qualify for the active deduction related to real estate losses, which is going to phase out at about $150,000 married. Okay, and so if you're below that $150,000 mark, then you should be able to take some losses against your income up to $25,000 for that real estate. Okay, so something else to kind of think about and consider when you're looking at real estate activities before the end of the year. Short-term rentals, to get that exception for the short-term rental, you'd have to rent it out at least twice, in my opinion. I mean, you could argue that you only have to rent it out once, but I think it's best if you rent it out at least twice. Okay, so you can definitely try to get that done. That's going to be a little tough, I'm going to be honest at this point, to get that done before the end of the year. But if you can get it done, great, go ahead and do it. I think it'd be great. Okay. All right, so I think that's all that we have in terms of cool last minute tips and tricks and things that you can do before the end of the year. Again, some stuff for small business owners, some stuff for the individual person. The 401k stuff is powerful. It works for either type of employee or a business owner, so that's great. And then a lot of the stuff though is definitely going to be for business owners. So if you haven't caught the drift yet from my videos, if you're trying to save yourself money on taxes and you're currently just a W-2 employee, you need to create yourself a little side business, a side hustle, whatever you want to call it. Okay, you got to get a little side business going, because that's going to be the best way you're going to be able to save yourself some money on taxes. All right, now you're not going to be able to write off losses every year, but you know, you can at least get some good additional income coming in that's tax advantaged, and then do some stuff like contributing to a solo 401k, etc., etc., etc. Okay, you get the point, you get the drift. Fantastic, awesome. All right, thanks everybody for tuning in. We're gonna be back with you with some more cool videos in the near future. Hope everybody has a good one. Bye.